All right, welcome to The Explainer. Today, we're going to dig into a financial report on a company that's found a ton of success by, well, looking where most of the big banks just don't. We're talking about funding the dream of homeownership, but way, way outside the big city lights.
I mean, that's a massive question for literally millions of people, right? And, the answer is actually the key to understanding this pretty incredible story about an Indian finance company that has built an absolute powerhouse business by solving this exact problem. Okay, so let's get right into it. Who is Aavas Financiers? And maybe more importantly, what is their whole mission? The thing that's got financial analysts sitting up and paying attention.
So at its heart, Aavas is a housing finance company. But here's a twist. They have a super specific focus. They work almost entirely in the rural and, let's call it, semi-urban parts of India. They're targeting customers that, the big traditional banks often just fly right over. And look, this is the really critical point. It's not just talk, They aren't just saying they serve these smaller markets. The numbers back it up big time. Over 85% of their loans are for homes that cost less than 25 lakh rupees. That's around $30,000, give or take. This shows they're all in on that truly affordable housing space.
Okay, so we know what they do, but does it actually work? Let's crack open the financial report and see what the numbers say. Is this niche focus actually paying off? Because, wow, the numbers are pretty eye-opening. First off, just look at this growth. Their total loan book, what the finance pros call assets under management, or AUM for short, it grew by a staggering 28.5% in just 1 year. That's a sign of insane demand, but it also tells you they really know how to execute. And here's where he gets really good. This number shows just how profitable they are. A return on equity, or ROE, of 16.8%, that is really, really strong. Let me put it this way. For every single dollar of shareholder money they have in the business, Aavas is making almost 17 cents in profit each year. It's just a super efficient money-making machine. Okay, but honestly, this might be the most impressive part of the whole story, how they manage their risk. See, normally when a lender grows that fast, you'd expect to see a lot more bad loans pile up. It just comes with the territory. But Aavas, they've managed to keep their gross non-performing assets, basically loans that have gone bad, down to just 1.8%. That's way, way below what you typically see. So the big question is, how in the world do they pull this off? Growing like crazy, staying super profitable, and keeping risks low in what's supposed to be a tricky market? Well, it all comes down to their competitive edge, their secret sauce, if you will. What's great is that their business model is super straightforward. No crazy, complex stuff here. Over 91% of their money comes from net interest income. It's the oldest trick in the banking book, right? They make money on the spread, the difference between the interest they earn on loans and what it costs them to borrow money. Simple, effective. Okay, so this slide right here, this is the secret sauce. The report points to this amazing mix of old school and new school. On one hand, they have this huge physical footprint, over 300 local branches, so they really get their customers. But on the other hand, they use these slick proprietary tech algorithms to figure out who's a good credit risk. It's that combo that lets them serve a market that the big, clunky, centralized banks just can't touch efficiently.
All right, so the company is obviously firing on all cylinders. But here's where the financial analysis gets down to brass tacks. It asks the one question every investor has to ask. Is the stock actually a good deal right now?
So according to this analysis, when you put Aavas side by side with its direct competitors, something really interesting pops out. Just look at those first two columns, the PE and PB ratios. Those are key valuation numbers. Aavas is trading at a lower multiple, which means it looks cheaper. But then you glance over to the right and what do you see? Higher profitability and way faster growth. So cheaper, but performing better? That's a combo that makes analysts sit up and take notice. So the report really boils the whole investment case down to this classic tug of war. The bull case, the reason to be optimistic, is pretty obvious, right? A huge untapped market, a team that knows how to get things done, and a stock that looks like a bargain. But the bear case, the reasons to be cautious, are just as real. I mean, what if the rural economy slows down? Or what if the big banks finally wake up and decide they want a piece of this action? Okay, so after laying out the good, the bad, and the ugly, where does the analysis actually land? Let's check out the final verdict and, just as important, the big warnings that come along with it.
While the conclusion from the report we're looking at is crystal clear, no beating around the bush, it slaps a buy rating on Aavas Financiers. That's a pretty strong signal that they believe the company's future looks brighter than the risks.
And they don't just leave it at that, they put a number on it. The report's main scenario, their base case, sets a target price of 2,100 rupees. Now, based on the stock price when this analysis came out, that suggests a potential upside of around 25%. Not too shabby.
But, and this is a big but, the analysis is super clear that this is no sure thing. It is not a risk-free bet. The report specifically flags these 5 major risks you've got to keep an eye on. Any one of these things, a big economic downturn hitting their customers, new government regulations, you name it, could seriously mess with their growth story.
When you step back, this deep dive into Aavas Financiers really teaches us a powerful lesson. It shows that you can create incredible value by just meticulously serving a market that everyone else decided wasn't worth the trouble. It proves that deep local know-how, when you combine it with smart technology, can build one heck of a business. And that kind of leaves us with one final thought, doesn't it? Where's the next big opportunity hiding? Right there in plain sight.